Good evening and welcome to another edition of Talking Bitcoin with your host, Danish Huddle. Tonight I want to touch upon an absolutely epic event and milestone in the history of Bitcoin, an extremely important thing, and a few other things I want to touch upon. Jim Cramer, Ray Dalio, Paul Tudor Jones. Afterwards, go have a look at the price of Bitcoin, where we are at in the bull run. And first off, let's talk about MicroStrategy. This is a company listed on NASDAQ with a market cap of 1.4 billion US dollars. They have the company is founded and run by a guy called Michael Saylor, a really smart guy. And this year, after doing his research, like many others that have been triggered to think twice about fiat currency and holding a lot of that in as cash in reserves, with all the money printing going on or currency printing that is going on, if that is really such a smart idea. So a lot of people are looking for a hedge, and Michael Saylor from MicroStrategy is absolutely one of those, an absolute legend. So MicroStrategy had 500 million US dollars in cash on their balance sheet out of a market cap of 1.4 billion. So that's a bit more than a third. And they wanted to do something with this cash. They wanted to hedge it against all the fiat currency printing that was going on. So they decided, after a lot of research, to convert $250 million of that into Bitcoin. They saw it as the safest way to have a very liquid asset, a very liquid money that anytime they need fiat currency, they can exchange it. But you don't want to hold fiat currency because it's being printed so fast that it's really losing value. People talk about asset inflation this year alone will be about 30%. So it's not that they're buying Bitcoin as an investment. They're really buying Bitcoin because they see that's the safe way of safeguarding their savings in the company, the cash on the balance sheet, against dilution. So the other half of this $500 million they had on the balance sheet, what they wanted to buy back stock. So they gave an offer to stockholders with a price, and they wanted to, they asked them if they wanted to sell the stock back to the company. But only $75 million ended up being required for that. There weren't more sellers of the stock. So there was another $175 million left in the company, and they didn't want to hold it as fiat currency because they know that gets diluted so fast. So they decided to convert that to Bitcoin as well. So a total of 425 million US dollars they exchanged from US dollars to Bitcoin, which means that this one company alone, which is a fairly small company compared to big blue chips on NASDAQ and Dow Jones, this small company that I honestly had never heard of before they announced that they had bought this many Bitcoin. This company now holds about 0.2% of all Bitcoin that will ever be in circulation. And the reason why this is absolutely epic and a milestone in Bitcoin's history is because here's a company that is converting everything they have in cash into Bitcoin because they believe that is a way to safeguard their liquid assets. And having a company that is doing that for the future going forward, it's the first publicly traded company that is saying, look, we've done our due diligence, we got to safeguard our shareholders' assets in this company, and we can't have it in fiat currency. We're going to put everything in Bitcoin. So that's the first major and publicly listed traded company that has converted everything into Bitcoin. So that is one of the first steps we are seeing towards a future that is relying 100% on Bitcoin, in my opinion. It's only the first. More will follow. Maybe not this year. Likely we'll see some of that next year. And just imagine if companies like Apple, which I believe have several $100 billion in cash on their balance sheet, if they want to buy Bitcoin for all of that, if they want to convert 100% of that, right now, I believe they even have more than in Bitcoin's entire market cap. Obviously, they can't buy for, say, $200 billion worth of Bitcoin without significantly moving the price vertically upwards. But it's just interesting to think that sooner or later, shareholders will likely demand from these companies that are major listed companies that they're prudent in preserving the assets in the company and start allocating it to a money that is not being diluted all the time. And fiat currency is being diluted. It's part of the public strategy of fiat currency. And Bitcoin has this 100% hard cap at 21 million units. So it's the hardest money there is. You can't get anything harder than absolutely 100% cap. So absolutely epic. A big day in the history of Bitcoin, and looking forward to see more of that coming in. By the way, there's an interview on YouTube by Pomp, which I have linked to below in the show notes here on YouTube. The interview with Michael Saylor from MicroStrategy, absolutely worth seeing. It's one of those YouTube videos that likely will be looked upon in the future as one of those major milestones in the history of Bitcoin. Furthermore, I also have a link below on Pomp, the same guy, his interview of Jim Cramer, a very famous, well-known host of the financial investor program on TV called Mad Money. This guy is a legend. He's been around for decades. He ran a hedge fund at one stage and has a very colorful and great personality. And I must say, after watching this interview, I really like the guy even more, getting to know him a little bit more, the person behind Jim Cramer. I think a very likable guy. And I wish him all the best. And the interesting thing about this is Jim Cramer is such a huge name in the investing public arena, and so well known by so many average investors on the street. So when he talks to Pomp and explains that this year what happened with the trillions of dollars being printed, and his daughter asked him, how are we going to pay those $1 trillion of loans that the government has extra taken on as debt? And he said, they had a discussion about that we really don't have that money, and it's going to be very hard, if not impossible, to pay all of this debt back that has been taken on when you want to flood the economy and society with money to keep people and companies liquid. So as he was saying, already he knew it was a good idea to have assets that are a great hedge against money printing, which was he has gold. He's an old gold bug. He has real estate, and of course he has stocks. But as he said, with gold as a hedge against inflation, you have the hedge, but you don't have the potential appreciation in terms of like the real value. And that's where Bitcoin not only is a hedge, but also has that extreme potential, in my opinion, in terms of if that takes over as money of the world, it can go up not just 2 or 3 times from here, but it's going to go up hundreds of times, in my opinion, from here. And in fact, I currently believe that the upside is about 2,000x, give or take. And I'll do another show some other time, getting into exactly why I believe that 2,000x from this level of around 10,000 is the realistic Also, as a very famous hedge fund founder, Ray Dalio, that is founded and is operating and running the world's largest hedge fund that has the most assets under management. He's an absolute legend, a guy that a lot of people pay attention to, and he's done a lot of money history, currency history, and how world reserve currencies usually end up in a currency collapse. And he says that US dollars is under threat of potentially collapsing and ending as a world reserve currency, which I think will happen in this decade. And what Ray Dalio says is, or has said this year when all the money printing started, is cash is trash. Because it's being diluted so fast, you really want to allocate it and buy something that is not just exploding in supply, but has limitations, like real estate or companies or gold. Now, Ray Dalio is not a Bitcoin advocate yet, but I believe that's just a matter of time. One of his friends, Paul Tudor Jones, I can see I misspelled his middle name, so sorry, Paul Tudor Jones. But Paul Tudor Jones and Ray Dalio are friends in the investing world, and speak often. And earlier this year, around the time that COVID hit and all the debt started to be taken on, and fiat currency printing and handing out of to 2%. Safeguard the value, and also he sees it as an investment. Unlike MicroStrategy, that's really just saying, look, we have cash, we want to have the best cash there is, and safeguard our money on our balance sheet. Where so Paul Tudor Jones have allocated close to 2%, and we'll see how that develops. But he's one of those old school investing legends. Started investing back in, I believe it was the 80s. He was one of the guys that pushed the envelope of futures trading when that came out, where you basically bet for or against certain assets into the future, if they're going to go up or down, basically going long or short. And he's generated fortunes in his hedge funds and has now allocated close to 2% to Bitcoin. So that will be interesting to follow. And then I just want to turn now to the price of Bitcoin in the grander scale. As many of you know, I do not claim to be, well, I am not a day trader, and I have zero skills in the day trading scene, and I know that I cannot outperform the market short term. Also, you have to consider the fees. So not only do you have to outperform the market, you also have to be able to pay for the fees every time you trade. For me personally, that is difficult to outperform the market plus fees on a short-term basis. But I believe that medium to long term, it's a lot easier to invest when you find the good high potential assets like Bitcoin. And that's why what I'm looking at, what I've identified, and I'm not the only one, but there is this halving price cycle in Bitcoin, and I want to take a look at that. So let me share screen and show that to you guys and comment on that. All right, so this is, let me just maximize it. This is the price graph of the Bitcoin and the stock to flow model, which I don't want to go into too much details now. It gets a little bit more um, uh, let's say, yeah, it gets a little bit more technical. So I just want to this time today focus on the price and the halvings and the pattern that we have seen throughout Bitcoin's history. So if you look on the right side, you can see this color scheme is showing how many days there is until Bitcoin's next halving. So when there's the most days to Bitcoin's next halving is right after one halving. That's when there's the furthest time until the next one, naturally. So this colorful line that you see throughout the graph is the price of Bitcoin, and the color reflects how many days until the next halving. So when the graph is red, as you can see here in the bottom left, that's when we had the first halving at the end of 2012. And let me just see if you know what? I gotta do like this. So sorry. I think you didn't see the graph before. I just explained it, so I don't want to take you guys' time and go through that again. But the graph that you see with the color, basically red means we just had a halving. As we go over time and get closer to the next halving, the graph gets orange, yellow, green, and then blue when we are right before a halving. So what this graph shows, let me just make sure, yes, it's there on the screen. It's really how the price develops in these cycles of the halvings. If we go to the first halving end of 2012, bottom left on this graph, you can see that it turns red around here, where we just have the first halving. And then what happens to the price month over month as we pass the halving is that the price reacts to this lack of supply that is in the market. The fact that the fresh supply has been cut in half, the price reacts, which is really economics 101. Some of the very basic stuff you learn in economics, I think we had it first year when I did my bachelor in micro and macroeconomics. And when supply of something goes down, the price goes up. It's really that simple. And so what we see is that the price here, just because of that lack of supply, is just being pushed up and up and up. Then there is a small correction, and it goes further up to the top in that period between the first and the second halving. Now, I'll go into the stock to flow model, I promise, on another episode. But I just want to say that the price the stock to flow model predicted compared to the actual price that Bitcoin had at that first major bull run top, well, after a halving, that the price overshot the model's price by a factor of 10 and ended up on $1,100 plus dollars per Bitcoin. If we go then, and that is then followed by, historically, it's always followed by a bear market. It also happened after that major bull run. Then we go to the second halving, which is right here in the middle of the picture in the summer of 2016. And again, you see the red line, the red graph where supply is cut in half yet again. So now it's a quarter of what it was in the very beginning of Bitcoin's existence. And because of this lacking supply in the market, the price is starting to be pushed upwards. As you can see, when it's getting orange and then yellow, it's just, it's a bull run that gets steeper and steeper. That's the nature of bull runs until there is a FOMO blow off top, as I like to call it. FOMO being fear of missing out, and a blow off top is just when things go absolutely ballistic, and eventually that very high price creates more sellers in the market than there are fresh new buyers that have been drawn in to support that price. And then you have the crash, you have a major loss of value in Bitcoin, where historically these crashes that then play out over some time in this bear market until capitulation bottom, Bitcoin's price has dropped anywhere from 85 to 95%. And that's something that scares a lot of people away from even considering Bitcoin as an investment. And they say it's too volatile. But what's just important is always to zoom out and look at that 4-year cycle. And if we look at here, the capitulation bottom after the second halving, that was, yes, it was down 85% of the $20,000 bull run top, but it was still, when you look at this 4-year cycle and compare it not to the previous top, because then you will be in the red, but compare it to 4 years ago when we're the same place in this cycle. That very, very bottom at $3,150 approximately on Bitstamp was still up 853% compared to 4 years ago. So even if you bought this asset, it went to the absolute rock bottom. You've seen yourself lose a lot of value on paper, at least. You only really lose it if you sell, of course. Then as long as you give it that 4 year, you're actually up 853% on that specific occasion. Now that leads me to where we are now here on the right side of the graph, where again the graph has turned red because we had the halving the 11th of May US time, 2020 this year. 2020 is this year, of course. And just like the previous, first the price is a little bit flat, and that's just like it is now. Then I expect absolutely that this lack of supply has the same effect as it always have. And personally, I think that $15,000 per Bitcoin by New Year's is something that resonates very well compared to history in the price of Bitcoin and the history of these bull runs that happens after the halving. They do get flatter each time. They do take longer time. If we look at the first halving bull run, that took a year. The second one took 1.5 years. I do expect this current one to take longer time. Essentially, it's because the speed at which the stock to flow is accelerating is slowing down. So the acceleration is not as fast as in the beginning. So stock to flow means how much stock is in circulation now compared to 1 year's production. So if the stock to flow is 10, then it takes 10 years new supply at the current rate at which new supply is being brought into circulation. It takes 10 years to reach the same amount as what is already in circulation. So it's really the invert of the inflation rate. So as the inflation rate goes down, the stock to flow goes up. And I find it very interesting. I'm not saying that this is a relationship that I strongly believe in yet, but it's numbers that I look at to absolutely try and do my best on timing this next bull run top. And that is in the first epoch of Bitcoin, means from it started until the first halving. It's called an epoch. The stock to flow went up from 0 to 8. So you could say it went up with a factor of infinity, because coming off 0 to 8, is not a factor except infinity. And after 1 year, the stock to flow was actually 1. So from 1 to 8, which was the stock to flow that Bitcoin ended with in the first halving, that was a factor 8 at least. And the overshot of the stock to flow models model price was a factor of 10. Those two are not far from each other, but again, because it's coming off zero, I don't think we can put too much emphasis in that. By the way, I have also in the show notes below on YouTube a link to Plan B's work, where he's looking at this relationship between the stock to flow number for Bitcoin and the price of Bitcoin. Now, so in the second epoch, from the first halving to the second halving, the stock to flow of Bitcoin went up from 8 to 24. So the stock to flow grew with a factor of 3. And the interesting thing is, while you can argue the stock to flow after it had been established in the early part of the first period, went up with about 10 if we count it from a little bit below 1. I know that's cherry picking. And the price overshot the stock to flow model with about 10. Second time around, after the second halving, the price, or the factor that stock to flow went up with, was 3, and the overshot of the price compared to the model was actually also 3. Now, between that second halving and to the third halving we just had, Bitcoin's stock to flow went up from 24 to 56. So it went up by a factor of 2.33. So as you can see, the growth in the stock to flow, it's still growing, but it's not growing as fast as it did early on, simply because we have more and more supply in circulation, and therefore there's more stock to take into account. But since it went up from 2.33, the stock to flow from the second to the third halving, maybe if this matches like, at least the last one, and you could argue also the first one, that would mean that the price of Bitcoin should overshoot the stock to flow model with a factor of 2.33. Now, this is not something I'm saying with a lot of conviction. This is just a number that I find interesting. Definitely not investment advice. Like, none of what I say is. This is just, me sharing my thoughts and my analysis, and it's entertainment and education and information for you to do with whatever you want. But the stock to flow model here on the right side of where we are currently, which means where the bull run top is going to be after this halving bull run, the model price is around 104. So if we should overshoot with a factor 2.33, now it could be less, it could be more. It's not something I'm saying with a ton of conviction. I'd like to see this play out, but if we should do that, then the price of Bitcoin goes above 200,000. It's something that I personally find to be fairly realistic. I think my feelings are, and I know you shouldn't have feelings in investing, but analysis kind of idea of where this is heading is that wait, I can stop the screen sharing now. There we go. So my expectations is that we will go above $100,000 in this bull run. The bull run will take longer time, as they have taken longer time each time, because the growth of that stock to flow, which is what is pushing the price of Bitcoin. It makes a lot of sense that when it's growing a little bit slower, the bull run also takes a little bit longer time, because that pressure of lacking supply pressing the price higher is just a little bit less. And I would say I definitely expect above $100,000. I expect that top to arrive in the ballpark of December 2021, but likely in the first quarter of 2022. Approximately give or take 1.5 years from now. So definitely above 100,000 in my conviction. I also think it's very likely we're going to go above $200,000. So and that's what I'm trading now. Personally, I strongly believe that buying and holding Bitcoin, not trading, just holding it for the long term, for the rest of this decade, is a phenomenal strategy that is very hard to beat. So that's what I'm mainly doing, just holding the little that I have. And then a portion of that, a minority of that, I am trading this halving cycle with, because I find it interesting. I believe that it's going to be something that is easy to do, but let's see how it goes. I'll keep doing these videos for the next at least 1.5 years if everything goes well. And let's see if I get it right or not. That's what I want to keep you guys updated on. So again, my expectations is that by the end of this year, we should reach, I think, at least 15,000. And then we'll see a top. I expect to be above 200,000. So it's basically a 20x return on the money or the value of Bitcoin right now. And I expect to see that around the turn from 21 to 22, likely in the beginning of 2022. So, and then one of the things I'm contemplating a lot at the moment, that I'm talking with, other guys, buddies in the Bitcoin community, is whether fiat currency will collapse within this time horizon, and we'll just see Bitcoin continuing and taking over and replacing the fiat currency regimes we know of the world, or if this bull run will happen early enough, which I believe it will, to have that massive price increase that will trigger people that got into Bitcoin at an early point to start selling because they want to pay off their mortgage, they want to buy a car, buy a bicycle, whatever they want to buy, take some profit off the table. And I think there's nothing wrong with that. If you have thrown yourself at Bitcoin with a lot of what you have available of your savings, and then if it does something like a 20x return, it's only a sound strategy to recover some of that and get the initial funds back. And then if this bull run bear market cycle continues as we've seen it now several times, there is an opportunity to, that's what I'm planning to do with the funds that I'm trading on eToro, of which there's also a link in the description below to my trading profile, where the performance in my portfolio are, public information. What I'm aiming to do is sell as close to that top as possible, everything that I do have in that eToro portfolio, and then buy back in the bear market bottom that I strongly believe still will come. So in that sense, basically multiply that smaller amount of the Bitcoin I have, basically to gain more Bitcoin. Again, I want to say probably the safest thing to do is to just buy and hold Bitcoin for the long term and not trade. But I feel so confident personally about this strategy and history that we will see a bull run. It will be possible to start taking profits above $200,000 and buy it back cheaper. So those are my thoughts today. First off, MicroStrategy, an absolutely epic milestone. What a legend, Michael Saylor, turning all the dollars on the balance sheet from cash, dollar cash into Bitcoin. I think that's going to turn out to be a phenomenal move from his side. I mean, imagine if Bitcoin does do this 10x or 20x, then the next 1.5 years, they will make way more money than the company has a market cap of currently. And right now, $425 million worth of Bitcoin of a market cap on 1.4 trillion. We're talking more than 25% of the company's value market cap today is in Bitcoin. And then again, that's the history of the bull runs and the bear markets. In short summary, the graph we looked at, and yeah, I expect 15,000 US dollars per Bitcoin at New Year, and I strongly believe we're going to go above 100,000, and a good chance that we'll go above 200,000 as well, roughly 1.5 years from now. On that note, I want to say thank you for watching. I hope you enjoyed it. Feel free to leave some comments if there's something that you want me to cover on the next one. And until then, have a great evening. Bye.